Namaskar. So, in this session, we'll be discussing about some common errors in accounting system. However, accounting system is sound. Whatever profession we follow, it is in practice that today or tomorrow some mistakes are there. So, if some mistakes are there in the accounting system, it is going to reflect the whole accounting system. Accounting system has to be accurate, accounting system has to be transparent, and most important, it should be easy to rely. Credibility is there. If the accounting system loses the credibility, shareholder will create problem, lender will create problem, supplier will create problem, the whole company will be in trouble. So accounting system has to be such a sound that it continues to be higher on the credibility in the society. So our accounting system is the key to understand what is happening in our business. It also vital for tax purpose also. If accounting system is wrong, tax calculation will be wrong. Unfortunately, whether we use cloud-based or desktop accounting system, mistakes can happen. Understanding what can go wrong and how it can impact your business, it is important. Even more important, knowing how to correct accounting errors and avoid future ones. For that, we will see what are the common errors generally happens in the accounting process one by one. The first stage is data entry error. Data entry, whatever journals are coming, that is recorded in some register or in computer. So whether it is recorded, whether entry is made in the register or it is typed out in the system, computer. Data entry is first step. And at the stage of data entry, if some mistake is done, then it is going to create long problem. So basically data entry errors are mistakes that are made where the and how items are entered in the accounting system. Some common data entry errors are blunders are entering items in the wrong account, transposing the numbers. What is transposing the numbers? Numbers like 231 is written as 132. Then leaving out or adding a digit or a decimal place. That also will come to know. Omitting or duplicating an entry, treating expenses as income or vice versa. One by one, we'll have at a glance. Errors of omission. This is simply a failure to record an item. Some journal came, some transaction came into the picture, and that transaction could not be recorded into the account book. That could not be entered into the system. So that is omission of the record. It may not be intentionally, by virtue of human error, by virtue of mistake, by virtue of end regions. If that data is not fed, then it creates error into the accounting process, and it is one of the most important and common error in the accounting system. Second is error of commission. Here wrong is done at many places. The amount you enter is correct, and when you even put it in the right general account, but you then use the incorrect sub account. That also happens. Account is correct, sub account is incorrect. Then also error of commission can take place. Then error of transposition. As I told, this error is recording the incorrect amount of an item by reversing the numbers. Many times while typing, 961 is written as 619 or 169. It's human error. 961 we have to type, or 169 we have to type, and by mistake it is typed 961. So such type of errors are known as transposition error. Then compensatory errors are there. Then error of duplication are there. Many times that journal is missed, and it is not entered, then that is the omission. And sometimes that journal is entered 2 times, 3 times, so that amount is increasing. So that error is called error of duplication, error of principle. This error is recording an item that does not comport with generally accepted account principle. Generally, in everywhere there is some generally accepted accounting principles, and that we have to follow while recording the data, while recording the transactions. So if we are not following while recording the transactions, then that error is known as error of principle, that error of entry reversal. This results in treating an expense as an item of income, and sometimes item of income as expense. So this may happen. So this is one of the common error in the accounting system. So now, if some error is happening, how much this error is going to affect the company itself, the company business itself, that we'll understand. Incorrect income reporting, and it has to be, if some error is there in the accounting system, it is going to affect into the reporting of income. Income system is going to be incorrect. Now incorrect cash flow information, that is also there. Incorrect expense reporting is there. Then increased labor cost, it will affect. Then late payment of fees, then improper matching or income and expenditure, then detecting fraud. If it is not checked, then chances of fraud is also there. So now, if this much is dangerous, common error remains. These errors are generally happening, but its implication is very high, very dangerous. So if the implication is so dangerous, what we should do to prevent the accounting errors, that is more important. Number one is train staff on data entry accuracy. The primary data entry is the place where untrained staffs are kept, low wages staffs are kept, and they commit the mistakes. So it's a duty of the business entity to train the staff before putting them on the task, to guide them, to educate them what to do, what not to do, how to do, where to do, when to do. This all has to be educated to the staff. Then only chances of error will be minimized. Then don't overload your employees. Many times work is this much and employees are one or two. These one or two employees are overloaded by the job. So when any person is overloaded by the job, chances of accident, chances of omission, chances of commission, chances of error increases. So proportionately manpower should be provided. If job is more, staff should be given more. Then utilize the newest accounting software. What happens? Accounting system software and cloud versions are continually being improved to simplify the entire accounting process. For the purpose of accounting process, there are so many softwares, time to time basis they are being improved, they are being simplified. So it's in the interest of the company that company should utilize the newest accounting software. Implement internal control. The company should have some checking system, so that second checking, third checking system should be there. Internal audit can be there, but before internal audit we are also having some internal controls, and that internal control is known as bank reconciliation statement every month. Whoever is maintaining accounts at the month end, bank reconciliation statement is done, and bank reconciliation decide whether the things are good or not good, whether it is matching or not matching. Bank reconciliation has to match with the account. Whatever account is there and whatever bank statements are there, both should match, and that is bank reconciliation. We have already discussed a separate session on this issue. Then check for differences between the budget and actual expenses. That we have to check how much is budget and how much expenses are going, and on the basis of that we can rule out the possibility of errors. Conduct a periodic professional review of account. Yes, that is the um, uh, audit part. So professional person can be deputed on this. Accountant to periodically review the account to make sure that they appropriately reflect the expenses you incur and comply with general accounting principles. So these are the basic uh, improvement areas. Number seventh is adopt best accounting practices and standards. Accounting process and practices are changing every time. Set deadline for the data entry. The staff should be given some time. By this date, data entry should be done. It should not be prolonged for a very long time. Otherwise, chances of error may increase. So please fix deadline for the data entry and reconciliation so that errors are found quickly and can easily be corrected. That is more important. As early as errors are found and corrected, system will be good. If it is found at very later stage, it is very difficult to reconcile all the things. So in this way, we can overcome common errors in accounting system. With this lecture, I am concluding accountancy. Now, wherever you find any problem, if you think some more items to be covered, let me know via the comment box. Let me know via the WhatsApp group. From my side, I have completed administrative law. I have completed principle of management, and I have completed accountancy. These three papers I have completed. Now you have to see Swami book publication for other things. Manuals, revenue manuals, medical manuals, benefit manuals, or other things, because that is referral in nature. So please take control of the your part. And as far as these three papers are concerned, administrative law, principle of management, and accountancy, these three you will secure much better marks than expected if you revise these 2 times, 3 times, 4 times. I am always here. I am always with you to clarify doubts on any these three issues. So please feel free to send your comments by comment box also or by WhatsApp also. Now I will shift to human resource management, finance management, marketing management, keeping in mind the deputy director exam syllabus. So we'll meet in next class. Till then, namaskar.